Welcome back to your daily pre-market brief for Thursday, June 25th. Last trading session recap. During Wednesday's session, the US stock market saw a distinct split as a sharp semiconductor sell-off weighed heavily on the broader tech sector ahead of major chip earnings. This downward pressure in mega-cap technology stocks kept the S&P 500 and the Nasdaq in the red for most of the day. Meanwhile, structural market concerns were amplified by discussions surrounding thin-float single-stock leveraged ETFs, exacerbating volatility in high-flying tech names. However, falling crude oil prices provided a significant tailwind for the broader economy, helping to offset tech valuation worries. This dynamic, alongside a drop in Treasury yields, allowed the Dow Jones to weather the tech weakness and secure a modest positive gain in afternoon trading. The indices, commodities, and general market mood. The S&P 500 closed at 7,358, down 0.1%. The Nasdaq ended at 25,477, falling 0.4%. The Dow Jones pushed higher to close at 51,849, up 0.4%. Gold dropped 3.4% to close at 3,990. Crude oil fell 4.3% to finish at 74. Bitcoin declined 3.9%, closing at 59,874. The 10-year Treasury yield dropped 2.0% to 4.40%. The VIX also slid 4.4% to close at 18.63. Collectively, these metrics show a market experiencing a sector rotation rather than outright panic. While the tech-heavy indices felt the pressure from major tech giants sliding lower, the broader market found support as falling energy costs and a cool-down in bond yields eased overarching inflation fears. This divergence suggests investors are currently taking profits in extended momentum names and shifting capital into more traditional sectors, keeping the overall market mood cautiously optimistic but highly selective. Top 5 gainers and losers. Filtering out the penny stocks trading under $5. Top 5% gainers. ICCM closed at 9.3 after surging 52%. This move was fueled by positive clinical data updates for their flagship medical devices, prompting heavy volume buying from healthcare investors. NVCT finished up 39% to close at 24.5. The pharmaceutical company saw aggressive accumulation following news of a fast-tracked regulatory pathway for their lead oncology asset. ABC climbed 36% to close at 10.1. Investors piled into the stock after the company announced a major new artificial intelligence drug discovery partnership. SLN jumped 26%, ending at 9.2. The stock reacted strongly to a high-conviction analyst upgrade and increased price targets. YON advanced 26% to close at 7.9. Shares popped following news of a massive corporate restructuring and updated forward revenue guidance. Top 5% losers. Toyo created 39% to close at 7.9. The company reported wider than expected earnings losses, forcing long-term holders to capitulate. JLHL dropped 32%, ending the day at 13.3. The severe sell-off was triggered by a sudden executive departure and lower forward projections. RGC fell 23% to finish at 8.6. Shares tumbled following an unexpected delay in their regulatory approval timeline. CBRS lost 20%, closing at 182.4. The tech firm faced heavy selling pressure amid a broader semiconductor sector pullback. CHPT declined 18%, closing at 5.6. The electric vehicle infrastructure firm lowered its forward delivery guidance due to persistent supply chain headwinds. Top 5 institutional whale trades. CBRS, strike 115, put expiring in 58 days, saw volume of 17,408 against an open interest of 1 for a ratio of 17,408 times. VIN, strike 166 call, expiring in 58 days, had volume of 9,960 with an open interest of 1, making the ratio 9,960 times. SLV, strike 53.5 call, expiring in 2 days, registered volume of 8,254 against an open interest of 1, giving a ratio of 8,254 times. FBTC, strike 54 call, expiring in 8 days, traded volume of 7,649 with open interest of 1 for a ratio of 7,649 times. When, strike 16, call expiring in 2 days, showed volume of 5,638 against an open interest of 1, driving a ratio of 5,638 times. These extreme ratios act as a massive warning sign for smart money followers. When our scanner flags daily volume that massively exceeds existing open interest, it strips away retail noise and exposes immediate aggressive institutional positioning. In these instances, institutions are placing highly leveraged directional bets ahead of anticipated near-term catalysts, showing us exactly where the smart money expects the market to move. Next trading session preview. Looking ahead to the Thursday, June 25th trading session, all eyes are glued to the economic calendar for the highly anticipated release of the Personal Consumption Expenditures Price Index, or PCE. As the Federal Reserve's preferred measure of inflation this morning, data drop will be the primary catalyst, driving market sentiment, and any hotter than expected numbers could spark intense volatility across all major asset classes. Furthermore, traders will be digesting the final reading for first quarter GDP growth and the weekly initial jobless claims report. Together, these data points will provide critical clues regarding the strength of the US economy and the future trajectory of interest rates, directly dictating the price action right from the opening bell. Next session, earnings schedule. Before the market opens, Thursday, investors will be passing through critical reports from Darden Restaurants and McCormick, giving crucial insights into the health of consumer discretionary spending and global grocery demand. In the technology space, BlackBerry will report, providing updates on their enterprise, cybersecurity segments, and software revenue. Finally, after the closing bell, FedEx Freight will release their numbers, acting as a major macroeconomic bellwether for the broader logistics and transportation sectors. That covers your market brief for today. If you found this breakdown helpful, make sure to hit that like button and subscribe so you don't miss tomorrow's pre-market briefing. Trade safe, manage your risk, and I'll see you in the next one.